Hello, everyone. Welcome into Above My Pay Grade. My name is Eric. Thanks for tuning in. If you could hit that like button, hit subscribe, really helps out the channel. If you were like me and you were like, hey, what the heck is going on with crypto? I always knew this was some kind of crazy Ponzi scheme and it couldn't be trusted. There's a lot of people in that boat. But before I get started in this story, there are a lot of Ponzi schemes out there. But I will tell you to think long and hard about why Bitcoin is different. And I'll just give you my quick take. So, Bitcoin was created to not have a third party intermediary, just kind of like gold, right? If you own gold or hold silver or gold in your hand, there is no counterparty risk. You hold it. But if you give it to a bank, much like JP Morgan, early in the day, they said, hey, wait a second, we need fractional reserve lending off this gold. Um, and so five people own the same bar essentially, or have a claim to the same bar. And when they all coming back to the bank asking for their bar of gold, turns out five of them asked for the same bar and they don't have it. So these derivatives are not just in the gold space, they're in the crypto space. And most, if not all, cryptos, except for Bitcoin. Yeah, I would encourage you to look into why Bitcoin is different. You can physically hold Bitcoin without third-party intermediaries, so they can't create derivatives, etc. But what happened in the crypto market is people weren't physically holding their Bitcoin like you can physically hold your gold. They were asking a bank, FTX, to hold it for them, along with other coins that are actually Fugazi that have no backing whatsoever. Um, and they're not really that valuable. The value proposition of Bitcoin is the fact that it is distributed ledger. There is no CEO that you can ask to shut it down. There's no board of directors that can change it. That is the value proposition of Bitcoin that makes it unique, kind of like gold. It's easier to transfer, yada, yada, yada. But I won't go too deep into that. But my point is, people trusted these third parties, and these third parties were playing massive games. And if you're not into crypto, here's what you should understand: this is bigger than Enron. It is absolutely massive, and I think it's going to have ripple effects throughout the economy. So even if you're not into crypto, banks are. And banks were investing with Sam Bankman-Fried and FTX. So how will that affect your pocketbook in the economy? I think it's going to have massive effects on these banks. I think it's going to have massive effects on the economy. And we're just getting started when it comes to this crypto contagion. So let's take a look at this Twitter profile. I think kind of lays it out pretty well. And you guys can let me know what you think. So this is from Genevieve Roche Dector. So she kind of lays out the flow of what has happened with FTX. And as I walk through this, you'll be like, how did no one, there's really smart people, because I think it's kind of elementary to say, well, these people are just stupid and they invested with this idiot guy. These people that invested with Sam Bankman-Fried aren't stupid. You have Kevin O'Leary, you have BlackRock, you had a lot of smart people who I was assume would look at their books. And this guy was hiding a lot of stuff. But number one, Genevieve says, is FTX did not have a board of directors. Why is that important? Because Sam Bankman-Fried was pulling all these levers and using leverage on clients' funds without their knowledge. All right. There is number two here. FTX donated $40 million. I think they were the second largest donor to the Democratic Party. And he donated that during midterms. He also donated during 2020. And they have a lot of pull in Washington. The cryptocurrency founder, Sam Bankman-Fried. And all you got to do is Google him in Washington. And when it comes to regulations, this guy was all about regulation. Basically, as I've said before, a lot of companies who are for regulation, it's to squash their competition. And this guy is no different. And there's a lot of shady stuff that went on with him in Washington trying to squash his competition so they couldn't do what he was doing, which was leveraging clients' funds. Rather odd. And the ties between him and government when it comes to lobbying. Number 3, so this is kind of the timeline. FTX chief lobbyist has deleted his Twitter account. So they I mean I mean, don't judge a book by its cover, but look at this guy. Oh my word. People trusted this guy, and if you just YouTube Sam Bankman-Fried and you see some of the things that he said, you're like, how? And the way he carried himself, how would you trust this guy with that much money? Um, it's rather odd. So the lobbyist in Washington, who was lobbying for regulation and regulation, aka special treatment for FTX. And you know, money talks, right? So money talks in Washington, and these lobbyists are donating lots of money. Wink, wink. Help us out. Help us eliminate our competition. Number 4, FTX worked with an auditing firm, Prager Metis, that has an office in the metaverse. You really can't make it up. Okay, so you remember in 2021, people were like, the metaverse is the future. Snoop Dogg has a house in the metaverse, yada yada yada. So this fake world, Prager Metis, who has this fake office in the metaverse, was the auditing firm. Really wild. AKA they weren't getting audited. Further down, Sam Bankman-Fried closed a funding round while playing League of Legends. Again, this guy, like, how people trusted this guy. I mean, a lot of people look at it and they go, well, Mr. Wonderful and BlackRock, these people aren't dumb. Sequoia, these angel investors and hedge funds, these people aren't stupid. So if they're investing, I should invest. And even if it didn't pass the giggle check, like your gut, you're like, this guy is a billionaire? This just doesn't seem right. This guy's running this company well. FTX has a crazy org chart that is very complex. Look at this. So who owns who? They have FTX US. They have a Alameda Capital. Look into who runs Alameda Capital. The girl that runs it looks like she's 12. You really can't make this stuff up. And this is twice as big, if not 3 times as big. We haven't even figured that out, as Enron. Keep that in mind as I go through this. So they have these shell companies, and they're moving money around. And if it seems complex and hard to understand, normally your gut tells you you're hiding something, and you'd be correct. They were. The new CEO of FTX was former Enron bankruptcy lawyer. Doesn't look good for Sam Bankman-Fried. Oh, and what do you know? FTX is a World Economic Forum partner. I would encourage you guys to go on World Economic Forum's website and look at their partners. This private-public partnership thing that's going on with the World Economic Forum is pretty dystopian, and they put it on their website. It is not conspiracy theory. It's right there in the open. So this is why I think there's contagion, right? Sam Bankman-Fried's investments span the ecosystem. So where did he invest, and who invested in Sam Bankman-Fried? All these companies that aren't really directly tied to the crypto markets, that invested a lot of money or had money tied up with Sam Bankman-Fried somehow, some way. And look down here, another crypto company, BlockFi, they just halted withdrawals as well. Because when it comes to the easiest way for me to explain it, and it makes sense in my mind, derivatives are kind of like, I heard this before. If I had a Snickers bar and I handed it to someone and they gave me an IOU for a Snickers bar, and then that person said, you know what? I want to do the same thing. So they give the Snickers bar to somebody else. They have an IOU, and that conga line keeps going for five people, right? But there's only one Snickers bar for the entire group. And if the 5th person decides to eat the Snickers bar, there was only one. But we all have these IOUs and these derivatives. And so these crypto companies do the same thing. Like, they use made up tokens as collateral for actual US dollars. And those made up tokens have value because they are their own market maker, making the markets appear as if this has value. They buy and sell and yada, yada, yada. They make it have the appearance of demand, which pushes up the price. And then they use their made up token that they printed out of thin air to actually get US dollars. And by the way, US dollars are used in the same way, unfortunately. It's not a made up token that actually has purchasing power, but it only has purchasing power because of trust, just like the FTT token. It only has purchasing power because of trust. Once trust breaks down, it goes away, just like the dollar. So I think we're seeing kind of a drive on what's about to happen. Number 10, FTX purchased $300 million in real estate, including a playground for the rich in Albany, Bahamas. This all has the telltale signs of corruption if somebody was looking. But I guess people were making money, so nobody was looking. And now Sam Bankman-Fried and FTX, apparently it has been hacked. This is as of today. It has been hacked by an anonymous third party, and between $650 million and $1 billion has disappeared from the anonymous third party. And Sam Bankman-Fried, the CEO, is now on the run. Maybe he's on the run, but he's left for Argentina. And there's a bigger story here, in my humble opinion. It's not that you kind of have to look behind the curtain and think about the psychology of people and how people invest. But these are people who are seasoned in the industry when it comes to investing, and they invested lots of money, and they spoke very highly of this guy and didn't give any warnings of this potentially happening. And you've got to think, how would that be possible? That all these smart people who are familiar with the industry would do this. In my humble opinion, it's because crypto is so new. These seasoned investors didn't understand how the crypto ecosystem is very similar to the traditional finance system. It really comes down to purchasing power and collateral. And if the collateral sucks, they don't know what's valuable in the crypto space ultimately. And so they're using these FTT tokens as collateral. And it does get very complicated, but back to what I originally said at the beginning, what makes Bitcoin valuable? What makes Bitcoin different? Is because it does not need a third-party intermediary. You can buy it, you can store it, no one can steal it from you. That is what makes it valuable. And that is different than all other cryptocurrencies. So if you ever hear somebody talk about Bitcoin and they say there's Bitcoin and then there's crypto, that's what they mean. And that's why it's different. The government doesn't control it. And if you think back to the truckers, right? If you ever hear the government has seized somebody's Bitcoin, the way the government seizes the Bitcoin is because it's stored at a bank or a crypto exchange. If you store your Bitcoin in cold storage, I can send it to you, you can send it to me without a third-party intermediary, and no one can take it from you. Of course, they can hold a gun and ask for your keys, hold a gun to your head, but they cannot take it from you over the interwebs, right? They cannot seize it. They cannot freeze it. That is unique. That is unique to Bitcoin and only Bitcoin. And if you realize that that's why Bitcoin was started, it was started after 2008 because of the craziness that went on with the bank bailouts and the contagion that happened there, which is very similar to what's happening in the crypto market today, you'll realize why people like myself like Bitcoin and only Bitcoin when it comes to crypto. There is no other cryptocurrency that I like other than Bitcoin. So anyways, let me know what you guys think in the comments below. Pretty wild story. As it develops, I'll probably do a couple more videos on it. Thanks for watching. Thanks for listening. See you guys in the next one. Peace.